selling occurring, right? So we're in this sell program at this time, short-term sell program. I say short-term because it's based off the weekly profile. From this high to this low, we've been selling, but there has been no cracking correlation to support the idea that we'll be seeing price go up higher, right? So that's the first step. First step is seeing a cracking correlation to support the idea that price will go higher. How will that manifest? Low, higher low, reacting off the US 500 versus the US 100, right? They are positively correlated. We haven't been seeing that lately. Market's been moving in tandem with one another. They're moving just fine. So because they're moving just fine, it's been also rallying up again lately. But because there's no divergence, there's no S&T, I don't think that we're gonna be making higher highs anytime soon. This whole rally up is to get people hyped up to think that it's gonna keep going up higher. Okay? So what will set the idea that price should go lower, back to these lows again? We should see a divergence in the highs instead. So we're looking at old highs. What are important ones? Well, one that just got tapped recently was the lunch buy-side liquidity in the form of a high, lower high on US 100 and a higher high on US 500. So I thought that was going to be a suspect high that we were going to divert back to. But notice what happened around 9:30. We could have anchored our fibs from low to high, and we're anticipating displacement to close below 75% to be able to support the idea that we're going to head down lower, back to the original intent, of making new lower lows. But because it didn't behave like that, we could still be reaching up for higher prices to make new SMT highs. We still got the London close buy-side liquidity, and we even got the New York AIM highs from Tuesday to react from. So if we're gonna keep going higher with the sole purpose of creating like a higher time frame manipulation, we should be seeing more buy-side liquidity get taken. We had a type 2 daily range, right? So we could expect a minor lower time frame reversal to get ourselves aligned with the idea that we're going to see prices go up higher. We saw that. Look, we had the important low. We had a lower low in US 100. Low, higher low, which one is stronger? US 500. Okay, the breaker entry, that's the one we want to attach our B leg to. If we're going to keep going higher, we want to set our slingshot. A post, B post, right? Think of it like a stretchy effect. We're slingshotting it for the purpose of price seeing it to go up higher. Did we get a close above? Did we get SMT? Yes. Did we get a close above 25%? Yes. Did we see price dip back down here? Yes. Where could we be aiming for? Not lunch buy-side liquidity. That's the one we just used on US 500. I think London close buy-side liquidity is next. And we're going to see if we're going to use that as an SMT on the higher time frame with a large displacement. This guy should still have room to go up higher. We still got this breaker here that could set us off to potentially go up higher prices. So I guess what were the three entries that would have been awesome today? Well, you had the London highs, remember? The turtle soup London highs that we had here. Okay, because we're not going to go up to react like a breaker, because we had already reacted like a breaker here on the lunch buy-side liquidity. This would be a nice high to get a turtle soup from. Set our stop loss to the original high that was referred to on US 500. Sell. Up to where? Where we had these type 2 dealing range lows, relative equal lows that we had here. We could have targeted. Ideally, we would have wanted down here to London close, but we didn't close below 25% at the time. That was a good area to anchor your fibs. A to B leg. Had displacement close to about 25%. Get on the order block on relative equal lows. Could lead to go up higher. Where to? London close. Now, we had this implied dealing range if we're going to go up higher from this low to this high, right? And if that's to happen, we retrace back down to where? Equilibrium. The equilibrium is right here. So anything below here is considered discount. dipped into discount, and now we're back to these highs again, aiming for what I believe is going to be London close highs. Anyways, you saw how I reached up to London close. We saw it live. It did take a while, right? We had to bear a retracement down here to equilibrium on our implied Dingling range, but it eventually pulled its way through, and now we're having some tea. So we'll see what happens next. But that's all the time I have right now. Mind you, it's already the 10:50 macro as well, so I gotta go. And hope you like the stream, and I'll see you in the